So realized vol staying in the mid 40s, staying in the mid to high 40s this week in Bitcoin. We did see some bigger swings within this new 35 to 38K range. Ethereum realized did drop though, just because that big 12% move dropped out of the look back window. So we're seeing a bit of convergence between the two realized vols between Bitcoin and Ethereum, although Ethereum is still a little bit higher in the low 50s. Positive carry has been reduced, therefore, on Bitcoin. As you can see here, we had some pretty positive carry about a week ago. That is reduced, although we're still sitting marginally negative. We were very negative. We're sitting marginally negative now in Ethereum. So if you are going to be selling Gamma, it does still look like there's better juice to be had in selling Bitcoin optionality into Thanksgiving than Ethereum at these levels. Now, in terms of what people are selling, selling out to Jan's probably a bit dangerous because you are likely to get your knee jerk on the ETF approvals by then. So people are selling much shorter dated 1 to 2 week stuff. There was a decent clip of 1st of December. So that's not this Friday, but the following Friday. Options straddles, I believe, that were sold, supplying the street with some Gamma there. So a few Gamma sellers starting to come out of the woodwork, and it makes sense given that there's some variance risk premium back, and we've got the Thanksgiving holiday upon us. Okay, looking at term structure, here we see a bit of a bid coming in the January bucket on Bitcoin. So that's the point of the curve that's starting to form a little bit of a kink. That was up nearly 3 points there as the market kind of cottons onto the idea that an approval is likely to come in that month. Apart from that, we did, like I said, we saw some selling of the absolute front end. The back end was relatively firm, though, as some Vega demand came back in. In terms of Ethereum, though, we saw vols come down pretty aggressively. About a 10 vol drop in the front end there as the breakout didn't materialize on the upside. And then it's a bit of a time-weighted move for the rest of the curve, but lower pretty much across the board there, even the back end down about 1.5 points in terms of vol. If you look at the actual levels of the vol, the term structures are pretty much trading in line with each other now. 60 vol in the long end for both assets, and then sort of mid 40s in the front. But these are still trading well above their averages for the year. So in general, crypto vols are elevated compared to where they've been for most of the year, and that's because the market is anticipating some big swings based on when we finally get our approval on this big story that's been hanging over crypto for a while. Okay, so that is your term structures. Looking at the relative value spread, so last week ETH had its moment in the sun. The front end went 10 vols over. That has collapsed back to zero. The entire curve has collapsed to the point where Bitcoin's back to a premium now, looking at about 2-3 vols in that January bucket that is the one that they're going after. So you can see this collapse here in this spread back to sort of more average levels, so let's say for this year at least. We were thinking the Ethereum narrative might hold a little bit longer than a week, but this thing, it's a bit of a tug of war going on between Bitcoin and Ethereum right now in terms of what is the driver within crypto. I thought Bitcoin is pretty much priced in. Everyone knows it's going to happen now. We've had enough of those noises, so even when it happens, we don't need to go that much higher. That doesn't seem to be what the market is saying right now. It is actually saying Bitcoin's holding up better here, and a break of 38 is imminent, and it's still got some legs to run. That's what it looks like. Now, the realized is still in favor of Ethereum by about 7 or 8 vols, yet the vol spread has flipped back towards Bitcoin marginally. It's basically a sign of confusion to me. I mean, it's saying that crypto markets don't really know what the dominant driver is for the next move. On the one hand, we know the BTC approval comes first, but then do markets then move on that and then sell the news and then chase the next narrative, which is clearly going to be about Ethereum, right? That's why there's confusion, and that's why this spread keeps flipping back and forth. Ultimately, realized vols are going to be the main driver of this spread. The call overwriting flow has dried up in Ethereum due to margin requirements and pretty much these call overwrites getting run over by the recent move as well. So, when the spread does go flat the way it is, looking at the technicals, as we've said, sure, Bitcoin might have a move up to 42K from here, but Ethereum's the one that's really got the legs if it decides to break the level. So we do think using these sort of levels sub-zero to put on call switches like we did a few weeks back those are smart trades, because when you do finally get a break on Ethereum, this thing can really fly. So I'd be getting into those trades. Maybe you wait for the knee jerk on Bitcoin on the approval, and then you get into that trade. But even so, like I said, I think you'll get a knee jerk, and it may well get faded. So being short calls, provided your short calls on Bitcoin are above 45k strikes, I don't think you're going to get into too much trouble doing those call switches against Ethereum. So those are my thoughts there. Looking at SKEW, similar tug of war between Bitcoin SKEW, Ethereum SKEW. They were both pretty much in line with each other last week. Bitcoin SKEW has kind of taken the reins this week. You see that from these green line in the 1 month dipping down, and again in the 3 month. So we've got an 8 to 10 vol call premium on Bitcoin as it keeps trying to break that 38k area, and then Ethereum SKEW, on the other hand, faded from its highs. It is still in call premium, but we're looking at more like 4 vols in the front end that extends to about 8 vols in the back end. So not quite as extreme as what Bitcoin is right now. As I said, the call switch, because of this call SKEW flipping as well, it makes those call switches look even better if you want to buy Ethereum calls and sell Bitcoin calls right now. I really do think that is probably one of the better opportunities out there at the minute. Okay, looking at the dashboard, still in sell call territory for Bitcoin, just because spot hasn't really retraced that much from recent highs, and vols is pretty elevated still. We also got positive carry there. If we look at Ethereum, that has reverted a lot more, so not quite as clear. Which is why I say I wouldn't really be looking to sell Ethereum Gamma at these levels. It's still got a slightly negative carry as well. In terms of what flows have been going through the market, volumes are down this week, 15% lower on Bitcoin, spot refusing to break that level. Similar themes, though, in terms of the flows that we're seeing. So we saw some short-dated put spreads being bought in November expiry, so that's for this Friday, very short-term put spreads. Calls continue to get rolled up and out. So any calls that were in the money from November and December are getting rolled up to higher strikes in December, or getting rolled out to January, even higher strikes, to try and capture that event that may not occur in the next few weeks, basically into the holiday period. One interesting trade as well, apart from that was those were the main flows. But one other interesting trade was March versus June call calendar, where someone was selling the June 100,000 strike calls and buying the March 70,000s against it. Very far out of the money options, but just interesting that people are playing out there in those far out of the money wings, and they're net sellers of the 100k strike. Okay, so that's what I'm seeing in Bitcoin. In Ethereum, volume's not down as much, only 5%. We saw some fresh Vegas selling flows though. Little bit of appetite coming back there, but people covering the 1,700 calls in November that are deep in the money now, and then reselling January 24 and March 24 calls across various strikes in that 2,400, 2,500 area. Some November options bought closer to the money as well. So the 1,900 puts, the 2,100 calls getting bought in about 11,000 per strike. December upside getting bought end of December. So people still believing that ETH might have that break before year end. 2,200, 2,300 calls getting bought. Some January 2000 straddles were sold. Just a vol trade really there. And then wingy upside in the 4,400 call area in January also getting bought, which is super low delta, low premium stuff. But again, people wanting some of that vol convexity to the upside, and thinking January might be the expiry to park that in, basically. Which kind of makes sense. If you're going to get the big event on Bitcoin in Jan, then maybe that's going to give Ethereum a move as well. Okay, looking at Gamma positioning, both of them remain in negative. Gamma, even as spot has retraced from the highs. So we are still in negative. BTC did accelerate lower into very negative into Friday's expiry last week. But it is back to kind of where it was the week before. So it recovered. That seems to be a bit of a common theme, where the dealers are short strikes into it at Friday expiry. We go towards those strikes. The Gamma explodes on them, and then they expire and go away, and we go to a more normal. But generally, we've been consistently short Gamma on Bitcoin for ages now. And that hasn't really changed, but the market's kind of used to that. So it's not really, I don't think it's having massive impact on Bitcoin's price action, but it is a consistent sort of state of play. Now, the big strikes that dealers are short are above 38K. So 38K, 40K, those are the big strikes. They short them in this Friday. They also short them to December. Now, Ethereum's gamma has been gradually going lower since the call overwriters all got blown up a month or two ago. So we've seen that steady decline in Ethereum gamma, which you can see from this kind of trend lower here. We don't have, I wouldn't say it's a massive short gamma position, but we have got some big strikes from sort of 1900 up to 2100 for this Friday. So that in itself is likely to spike down if we are in and around those strikes. And that might provide you some fuel for some Ethereum chop this week as that gamma gets bigger. And remember, just because Ethereum market depth and liquidity is not as big as Bitcoin, you don't need as much of a large gamma position to actually have some material impact. So something to be aware of there. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.